Hello, everyone. Steve Ankerstar here, and thank you so much for listening in. It's been a while since I put out a video in this particular format to this particular email group, but I do want to kind of open your eyes as to what else is out there. If you're looking for more or to hear me on a daily basis, that stuff exists. So let me explain that to you real quick, and then we will get into the meat of the presentation, which is the election's 15 days out. What are the things to think about? What is the market going to do under the different scenarios? I have some client questions that were asked to me today. They're really good, and we will get to all of those in just a minute after the quick disclaimer. If you're not a current client of Afterburner Financial, then I do not know your personal financial situation, and you have to take everything in this presentation and do your own due diligence before acting on it. Okay, with that, I have a couple of projects going on. So I have a morning daily briefing where I'm on air every morning. It's very easy for me. I just flick on the camera and then I start talking much like I am now, except with less material prepared. And we talk about what the market's going on in the market, what the headlines are of the day, and what the expected moves of the day are. We talk about an investable thesis. All of that, we're on air for about 35 minutes. So it's 20 minutes prior to the open. Once it gets within 5 minutes of the open, I do call a day trade or two every day. Sometimes I'll take a pass. And then I'll close that trade out within the first few minutes after the market open and answer everybody's questions from there. So there's a chat room and a Q&A. So if you have questions, that is a great way to pop in and ask a question. If you just want to hear what I'm talking about on a daily basis, here's exactly what you need to do. Pause the video. Go right now, pause this replay. Go to YouTube and just type in on time, on target, Ankerstar. You'll see a little patch come up, on time, on target, and just click subscribe to that. I have that uploaded about 9:30 every day. That's 9:30 Central. So if you care, you can kind of see what the headline is or see what the title of the presentation is. And if it's something you want to listen to, check it out. If you don't, hey, delete it and move on. But if you subscribe, that way you'll at least see what I'm putting out every day. I did one on following the Palantir IPO, 2 weeks ago now, some things on the vice presidential debate. So there's different topics you may be interested in. So again, go to YouTube. There's a search bar, on time, on target, Ankerstar. You'll see a patch pop up. That's me. Subscribe to that, and you'll see I've been doing this for 3 months now. So literally, almost 100 videos on there. So you can check that out. Also, if you're interested in the podcast, again, when clients ask me questions, I write them down. I literally put a sticky on my computer, and that becomes a podcast episode. When I first started, for the first month and a half, I put one out every day, pretty much. Now I'm more like once a week, and I'm going to settle into that. I also have another financial thought leadership series coming up. If you enjoyed the first one, another group of 10 coming around the second time right after the election. So that's something I'll get to once we have the election behind us. And again, we'll see how much overhauling we have to do of the portfolios, if any, after the election. And then once my time is freed back up, then I will get into that financial thought leadership series. So to subscribe to that, just simply go to anywhere you listen to podcast. I'm the only on time, on target podcast out there. So you'll see a picture of me on the square. And again, you'll see the patch. Subscribe to that. Again, if you see a question pop up that you don't care about, just delete it. So literally, client questions are how I get my material there. I flick the mic on and I answer it as if we were talking in a nice conversational tone. And it's not perfect. There's uhs and ahs, and I don't care about any of that stuff. It's just about getting information to you. And then if you still want to talk to me about your personal situation, then that's how to be like, hey, I listened to your podcast on this. I got a question on X and how it relates to me. That is like brilliant. That is as perfect as I can get as far as getting information out to all of you. And again, it's for free. Now, what you do have to pay for, if you want to join in the Monday morning alongside with me and take a day trade or at least watch along real time, you can. It's $25 a month. It's not much, but then again, if that doesn't interest you, don't do it. I only want people that are there that want to hear it real time, but there is a little bit of a charge for that. And again, trying to provide the replays to you for free so you can still hear the long-term investable theses that I'm talking about. All right. Lastly, on an update here, personally, as a note, if you're a client of Afterburner Financial, thank you. It's been an amazing 6 years. We're on track for another massive growth rate going into what I would call a challenging year. So thank you for your trust and confidence. I'm up to 96 clients and I'm only going to 100. So I've got room for 4 more. So if you were thinking about making a referral to somebody, the faster I can get the next 4 clients on board, the faster I can close the new clients, which means I don't have to worry about some of the marketing and advertising stuff that I'm spending to get clients. So again, it helps me focus back now. Once I have my 100, we're going to go forth as 100. And if I expand past that, it's going to be after my oldest graduates high school in a year and a half. You know, where I'm right now, it's family time and volleyball and my job, and I love that. Or, you know, later on when I hire somebody, and then we will talk about where I go from there. Also, I have a plan for a book to get out by the end of 2020. I don't know if I'm going to make that. Again, it'll be called On Time, On Target. And then also finish up my PhD dissertation. I want to do that in 2021. So those are things that closing in new clients will also help me not only focus on your portfolios and providing the free information that I do, but also to get some personal goals accomplished next year. All right, let's go over now and look at the market and where we have been. I'm going to share out to you the TD Ameritrade ThinkPipes platform. It's actually the professional version of Think or Swim. I'm going to kill my camera so you don't have to look at me anymore, and I don't have to look at me. All right, so what you're seeing here is a one-year chart of the SPY, the S&P 500, from left to right. So we have the big run up to mid-February where we had the, at the time, highs of the years. You had the big 35% drop in less than a month, largest in history, or quickest in history, I should say, not largest, all the way down to the March 23rd lows. If you're following along my videos, one day early, I had the lock and load call out there. So if you're with me, this went very well for you. And we've had a nice long recovery. People argue whether this is V or an L or we're going to have a W of what letter this is. I don't care. We went back to our new highs in almost 3 months and then broke new highs in about 6 months after the March sell-off. So it was really, you know, businesses do what businesses do. Well, unfortunately, the lower businesses get killed off and new businesses come out of it. And you know, some expand, like Amazon hiring all those folks. So lots of companies have pivoted and reoriented, are much stronger now. So good on them. We did have a market sell-off of 10% in September. If you were following along, I made exactly one video and I said, don't sweat it, because literally we're going back in time until where we were 2 months ago. Okay. So, I mean, if you would have said at the beginning of 2020, before we knew any, let's get to 2020, if you'd have said here that we were going to be, you know, 8% higher here on the year, but you didn't know what happened in between, would you say, yeah, that's good? Most of us would go, yeah, big thumbs up. I'll take 8%. But in this case, we took a roller coaster ride. So don't forget that you're not, you know, the roller coaster is a history. You can't do anything about it. You know, you heard Ted Lasso say, be like a goldfish and forget something, you know, nine seconds later. But really, you do have to put what happened behind you. You can learn from it, but it shouldn't affect you. The fact is we got new highs here. We had a 10% sell-off. We've had about another 8% or so retracement of that. So really, when you're looking at where we're sitting right now, the danger's to the downside. And that's what I've been saying. I've been saying, you know, for months now, since basically the past 3.5 months, and I've been wrong. I'll own that we would go into the election between the 300 and 320 range. We have been above that. I will explain why that is on a presentation from just a slide from Goldman Sachs here in a few minutes. When you look at how the things have acted, you know, these are the past 5 days. So the 5 days are in dark blue there. This was today, big down day. Yep, got ugly. Already there was some stimulus talks after the market closed. So possibly good news. The market has already recovered back to where it was. This is Thursday at the open. So we're not, I mean, there's so much negativity out there. It seems like we're in this big slump. We're not. We were where we were, you know, 48 market hours ago. So hopefully that keeps it into perspective. All right, let's share out a different screen, which I will share now, the PowerPoint screen. So share that out and get that full screen for you. Okay, yeah, market conflicted, you bet. Here's the written disclaimer if you didn't catch it early, and all my information. All right, what else is going on? So we have the election, and I will talk about that as promised here in a minute. There are also several things going out. We've been talking about the second wave for some time now. Europe is kind of leading the way, that's in quotes, I guess, on the second wave because they've had more recently and it's gotten a lot of press and their market's been hit. Well, the biggest issue is if you personally, you should always be comfortable with your investments and the level of risk that you're taking. If you're ever not comfortable or if you ever get nervous, you simply take risk off. And if that takes you all the way down to zero, so be it. We'll sit at zero, meaning no risk, and then we'll move back in when we can. So it's got to be right for you. Now, there will be at the end of all this the exact textbook amount of risk you should have had, and you know, somebody will study it, maybe me next year, I don't know, and look at that. But at the end of the day, you need to be confident in your investments. And if you don't like what you see going into the elections, let me move you even further into fixed income, which again, in fixed income, you're going to make around 3%. You're really just trying not to lose money. So you start thinking I'm not in bonds to try to make money. I'm just trying to not lose money. Or why not go to cash? Well, you get 3% while you wait instead of your fractional, interest that you get off a cash account. So that's how to reduce risk. And there's really the big issues going into the right now for the next 15 days are, is there or is there not going to be a stimulus package? If there is, markets go higher. I don't care if it's the day before the election. When there's stimulus, markets will go higher. The day after, markets will go higher no matter who's president. Vaccine is the second thing we need to think about going into the end of 2020, hopefully, and not well into 2021, but we don't know that either. When there's a legitimate vaccine, each rumor of increasing integrity, I should say, gets more and more attention out of the market. But when there's, no kidding, a mass-produced and available to everyone vaccine, which may be a while, that is the market's going to go higher. I don't care what's going on. I don't care if we just raise taxes. It doesn't matter. The day we have a vaccine, the markets will go higher, and you know that and can expect that. Well, then we have the social unrest that's going on. Not necessarily dominant in the news, but certainly present in the news, and it doesn't affect business directly, but it certainly affects us as a country as far as how we feel about ourselves going forward. And are we a growing and becoming greater type nation? I shouldn't borrow a partisan term like that, but I mean, are we getting better as a country, or are we devolving as a country? That, I think, you throw that in there with, there's social unrest, and there's also debt and inflation. We're pulling a lot of financial levers that are pulled to the maximum. So that'll be interesting to see how that plays out. So there's a lot out there, not just the election that's coming up, but we'll certainly talk about the election here in a second. So let me bring that down. And let me show you for those that have been with me for a while, I get my information from Goldman Sachs. That is not me telling you that you should go with that. It's not an endorsement, because I'm not allowed to endorse anybody because I'm an independent. So when I say this is where I get my information, this is my personal opinion on what I like to, the source that I like to go to and I trust the most, more so than TD Ameritrade or Schwab, which are my custodians. I go to a third party for some of the stuff that they bring up. And I think they make fantastic points and also have extremely talented people that work there. And that's why I do it. So this is a presentation of theirs. So I'm going to flip through it to get to one slide. So this is the stuff. I'll sit down with one of the Goldman reps and they will talk in detail, about an hour as to, 10 minutes per slide, if you can kind of think of it, because it's only 10 minutes slides. You've been getting killed with this in mainstream media. Which states make a difference in our particular system, and how they're leaning. This is how many votes. This breaks down your electoral college, and then you get your House statistics, and the majority. There's your Senate statistics, and we shall see. So this is kind of interesting. Is if you look at the bottom when 1968 on the right-hand side, you have your kind of blue agenda and red agenda, if you will. And there was some, at least, middle ground for us to reach an agreement. Well, in 1980, you can kind of see what this graph shows as far as political ideologies being separate. And now, 2018, I know it's a little bit dated, but the same holds today. The parties are so far apart that it becomes an all or nothing election, and all or nothing personally versus how it really should be is most of the country should be a little bit happier than the rest of the country. But just like your portfolio, you should be able to believe in your president and your administration going forward. It doesn't appear necessarily that we're in that particular case right now, and I don't know what it'll take to get back there. There's some other things you can look at as far as investable theses. That's too in detail for this presentation. So you can pause these if you want to go back and read this in detail. But yeah, those aren't what I really want to talk about. What I want to talk about is this slide, which is really interesting. And it doesn't leap off the page as to what it says. So let me just explain it. So it looks at the election year for the past I want to say since 1928. So what's that? 80 some and change years. So several elections, not just a few, and not just post World War II world. And the red line isn't Republican; it's incumbent. and the blue line is the challenger. And it takes it from day one of the election year all the way up through to and through the election to the end of the year. So quite an interesting study. And what if I don't think you can see my arrow, but if you can look at, the gray box starts really at the beginning of August. And that's where, if the market believes, and I'll give you the punchline so you don't have to hurt your brain on this. The punchline is the market has been pricing in an incumbent win, a Trump win, for some time now. That's not what you hear in the media. You hear, 10 plus points the other way. But we saw 2016, nobody knows till we vote. So markets, though, want to do their best with their money. Well, the market has been pricing in a move up, which means incumbent win, over the past however many 80 plus years from August 1st to the election. If it's the incumbent coming into office, it's averaged a 4.5% gain. I mean, that's almost an annual gain, not quite. I mean, but at least half of a 6-month gain priced in. And then from that same period of time, if it's the challenger, again, not tied to parties, just the challenger, it drops a 1.2%. So that tells you of the desire for certainty in markets, not a desire for a certain party to be in charge and the other one not to be in charge. It's the certainty of it all. So fine, elect who we elect. We'll not reorganize government, but we'll repopulate government with the people that we've elected, and it'll flow one way or the other as far as your particular agenda, and life will go on. And all the businesses are out there will do the same thing I will do with my business. Is I will look at, okay, what are my expected changes? How am I going to turn around and now maximize my business / your portfolios for performance under the new information that I have? I'm not going to cry over what the information is. I just want it, and I want to process it, and I want to, move on it to make you some money. And me as well, of course. But what's illustrative here is we talked about that gray zone and how it rewards the incumbent. It will look at after the election. In both cases, it shows that, it's if you put the two together, it averages 3.2% move higher. And that's just that certainty. That's that reorganizing, if it's going to be raising taxes or, whatever the issues are, people are going to be reprocessing it. Investors are going to be reprocessing, businesses are going to be reprocessing and reorienting to the new information. And you could see a move higher in the face of maybe a huge tax cut. Yeah, that can happen. That's what this chart says. All right, let me bring that down, and I will just go to me for the closing thoughts as far as the questions. Again, I love it when I get your questions. Text and email are the best. It's sometimes hard to answer the phone during the day, especially during election year when it's not people asking financial questions, it's people asking polling questions. But I do have some questions here that I wanted to go over. So thank you to Andy who brought those in today. He said, I noticed you're going to a lot more fixed income in my portfolio. What's your strategy? Strategy is, like I outlined before, is to just de-risk. I'm not trying to kill it in bonds. This is not a situation where I know something and I'm getting in on bonds. We did some of that in March when some of these bonds are getting cut in half. Well, of course you're going to buy them when they're half. And GE was going to go bankrupt. GE is not going bankrupt. But you get a sale on certain things. It's not capitalizing on that. All I'm doing by moving into funds, FIXD is my newest fund, and fixed income, is preserving around a 3% gain in investment grade bonds. Not looking to get rich, not looking for you to have anything to particularly brag about. I don't want it to lose money, and I want it to generate a little bit monthly until I decide what information is out there for moving forward in your portfolios after the election. Okay, next question. What is your opinion? Ooh, I like this one. Remember, there's my personal opinion, which is irrelevant, and my professional opinion, which is always going to be answered into relation to your money and policy, that sort of thing. So what is your opinion on the future of the market in case of a Trump Republican success or a Biden Democrat success? I think in both cases, the market goes down. I've said this for a long time. Most of 2020 is that the stuff that will bring the market down initially for Trump is how aggressive he's going to go after China, because he's not going to wait till he's, he doesn't have to wait till he takes office because he's in office. So I think the day after the election is the book of wonder flops open on the desk, and we'll find out what exactly it is Donald Trump wants to do, because now he's got 4 years and change to get that done. So that will be interesting. I think that will spook the market until everybody can kind of go, okay, what's he talking about? And then like I said, work its way back in. I do think we are higher now than we end the year. So I do think we sell off into the election and we end up lower than we are right now. So 2020, I think, will still hold a positive as far as the whole year, which we should be thankful for in a crazy year like this. But that's my take. A Biden Democrat success, even including a blue wave. I think, again, markets will sell off because the concern will be taxes. Again, we'll find out that some of that is Republican hype or hyperbole, and some of it is real. I do believe some of these taxes need to go up. Eventually somebody's got to pay for all this stuff, and we've been running a deficit forever, it seems. And both parties are guilty there. You can't act like they're not. But I think we will want to know what's in the tax code. And then I think the market will start down until we start getting more information like, well, we have all these plans for taxes, but we really can't really enact a tax raise in the middle of a pandemic. So a lot of it's tied to when magically the pandemic ends, or if it ends or dissipates, or whatever the end state is on this thing. So again, I think initially the market sells off on both. That'll be me re-wickering the portfolios anyway, based on what now I know. It's gonna be a very busy time for me to get our money pointed back higher in the best direction. So great question. All right, view on when the COVID vaccine is finally available. Again, it'll be out in waves, right? There will be a vaccine, which the market will move higher that day and then do what it does. And then there will be the day we have a mass produced vaccine, which the market will move higher. Well, we get it out to first responders, teachers, open back schools, police, military, whoever gets on that list will get the first round of vaccines, and that's the right thing to do. And then you go into high risk in the population, which is not me. So for those that are healthy and been very blessed in their lives, it's going to be a while. The person who's asking me is very healthy, so it's going to be a while before you get it. But I think as soon as it starts flowing out, each of those moves will take the market back higher. Okay, then the last one is possible tax changes in a blue wave scenario with the Biden Democratic Senate. No crystal ball, and I'm not pretending to know everything in all of this, but looking at the information, I think it's going to be a challenge to make a tax code change. I don't think they'll be able to enable what they would, even if they could consider what is a perfect tax package, right, which may not exist in itself, but even an acceptable one, I think they might have to do it in waves. There's going to be a small wave, I think, focused on, I've heard the 400K and above income crowd. I don't know, and we'll see, but I think it will be measured kind of commensurate with, we'll have less tax raises until the vaccine kind of fades, at least fades into a normality, and then we may see around 2 or 3. That's how I would do it. I don't know. I'm not a politician, thankfully, that I don't have to worry about that stuff. But at least that's what I kind of see that plan out. So again, thanks for the questions. All right, went a little bit long today. Hopefully you guys enjoyed this new format. Just as a reminder, if you want to hear from me every day, or at least hear what I'm talking about, you'll get a little email or notification what the topic was. Again, go to the YouTube, On Time, On Target, Ankerstar, and you will see my channel. Subscribe, and you'll have that information available to you. And same thing with the podcast. Anywhere you find podcasts, just On Time, On Target. There it pops right up, no matter the platform. And you can check that out whenever you hear a question that interests you. Other than that, I am going to start reaching out to folks about some concerns I have going into the election specific to their situations. But always feel free to contact me if anything's on your mind or you're not confident in your investments. With that, I'm going to let you go. Thank you so much for listening. Bye.